Line here from inflation expectations being higher, therefore the consumer is feeling worse?
It's actually not quite as simple as that. I think there are a number of factors that are really weighing on consumers. The persistence of inflation is one, of course, and consumers do appear to be worried that inflation is going to pick up again in not just next year, but in the long run as well. But consumers are really being weighed down by high interest rates. I think that even though there wasn't a rate hike this month, consumers have been increasingly telling us that buying conditions for cars, for homes, for durable goods, that these buying conditions are really terrible because of high borrowing costs.
Joanne, good morning. It's Guy. So why are inflation expectations rising?
I think even though consumers have seen that over the last year inflation has slowed down, they're still seeing the stubbornness of high prices, and that's still really hurting their pocketbook and hurting how they feel about their living standards. And given that the slowdown has stalled or the slowdown has decelerated, consumers are concerned that inflation could very well pick up again. We're seeing this also in gas price expectations. You're absolutely right that gas prices have not been trending up recently. But at the same time, consumers are waiting for the other shoe to drop and are expecting gas prices to rise next year.
Well, and Joanne, to your point about a lot of this being just that they're facing higher borrowing costs and that's having an impact overall on sentiment, I can't imagine that language like we've heard from Chairman Powell just this week suggesting like rates may actually go higher if they need to, that isn't necessarily helpful.
I think it's not helpful for consumer sentiment for sure, but it could be helpful in terms of cooling consumer spending going forward. I think consumers are feeling much more apprehensive about the economy than they were just a few months ago. The sentiment numbers we saw today are the continuation of 4 consecutive months of declines, small declines, but still declines in sentiment. I think their long-term economic expectations for the economy are definitely deteriorating. And part of that is because of 2 wars in Gaza, a war in Ukraine, as well as apprehension over next year's election cycle.
Joanne, would you say that inflation expectations for U.S. consumers are now unanchored?
So for long-term inflation expectations, which is what we're usually looking at when we're talking about anchored expectations, it's a little bit above the 2.9 to 3.1 range that we've seen pretty much for the entirety of the last 2 years. However, I think we really want to wait until the end of the month to see if it sticks. I mean, 3.2 is not that, it's just 1/10 above the 3.1, which we've seen multiple times over the last year. So I would suggest caution in looking at this 5 to 10 year number. Let's see if it sticks at the end of the month.
Well, I'm sure the Fed will be watching to see if it sticks, as it really is trying to keep a handle on inflation expectations. But as we know, Joanne, that's just one part of the Fed's dual mandate. Yes, they want to get inflation back down to that 2% target, but they also are trying to look at the employment side of the mandate as well. How much does what's happening in the labor market factor into how consumers are feeling? Are they feeling less confident about their ability to keep their job or get a new one?
Consumers' views of their own personal finances and their own labor market prospects haven't changed a whole lot in this month. That being said, we are seeing some deterioration in consumer expectations over the unemployment rate. People are expecting labor markets to weaken a bit. Income expectations are not nearly as strong as they were in previous months. So it's really not a great sign that consumers see an acceleration in inflation as well as potential weakening in labor markets, which has been our main source of strength in the economy.
Joanne, can you just give me a sense of what is happening within the various income brackets? Are we starting to see the pain being felt by the upper income brackets in a way that we weren't before?
It's actually a little bit different than that. So there was a convergence in sentiment by income over the course of this high inflation period, but they've started to diverge again. Most of the decline in sentiment that we're seeing right now is among younger consumers, lower income consumers. High income consumers, particularly those with large stock holdings, actually their sentiment hasn't moved a whole lot since last month, and that's a reflection of recent strength in the last couple of weeks in stock markets.
So all that's to say, Joanne, that could change very quickly if we get a sudden turn in the equity market.
That's right. I think that the relative strength that we're seeing in higher income consumers is not a very stable situation. Given that they've been moving a lot with stock markets lately, it could take a turn for a worse pretty easily.